Hey guys, welcome back to the channel. So I kind of want to go over, some more real estate information, but this time I want to talk about, buy and hold real estate or flipping properties, right? Which one's better, the differences and stuff like that, right? Because the question of whether flipping or buying and holding real estate is, whichever one is the best strategy for investing in property. I don't really think there's one correct answer, right? Instead, choosing one over the other should be part of a clear strategic plan that covers your overall goals, right? Or maybe you do both, right? Well, you should also take into consideration the opportunities presented by what the current market is, right? Um, you know, we're going to take a look at some of the things involved in pursuing each strategy and how to decide which one might be right for you. But first, let's start off with why would you invest in real estate, right? We've touched on this before, but let's give a quick little, you know, overview, right? Because it's a good question, right? Because residential real estate ownership is gaining, ever increasing interest from retail investors for a lot of reasons, right? And some of them can be real estate can provide more predictable returns than stocks and bonds. Real estate provides an inflation hedge because rental rates and investment cash flow usually rises by at least as much as the inflation rate. Real estate provides an excellent place for capital in times when you're unsure of the prospects for stocks and bonds. The equity created in a real estate investment is going to provide an excellent base for financing other investment opportunities. Instead of borrowing to get the capital to invest, buying stocks on margin, investors can borrow against the equity to finance other projects. The tax deductibility of mortgage interest makes borrowing against a home attractive. And then, in addition to providing cash flow for owners, residential real estate can also be used for a home or other purposes. All right, so let's talk about passive versus active income, right? One key distinction between buying and holding and then flipping properties is that the former can provide you with the passive income and the latter offers active income. So, passive income is money that is earned on investments that continues to make money without any material participation on your part, right? It could be from stocks and bonds or from owning rental property and receiving rental income each month. Provided you hire, say, a management company to do all the required tasks, finding a tenant, collecting rent, taking care of maintenance, all that good stuff, right? Active income is money that you earn in exchange for the work that you perform, right? That includes your salary from work, as well as the profits you make from flipping houses. Flipping is considered active income, regardless of whether you are doing the physical labor of, stripping the floors and painting the walls and all that stuff, right? It's still a business that you engage in, finding a property to flip, purchasing it, obtaining insurance, overseeing contractors, managing the product, and a whole bunch of other things, right? So, in this sense, flipping isn't just an investment strategy like buying and holding stocks or real estate. If you have a day job, keep in mind that your spare time will likely be taken up with all of the demands that flipping a property might have, right? Let's talk about some ways to flip properties, right? I want to talk about two major ways because there's two major types of properties can be used in a buy and sell approach to real estate investing, right? The first is houses or apartments that can be purchased below current market value because they're in financial distress. The second, the fixer upper, right? A property with structural, design, or condition issues that can be overcome to create value. Investors who focus on distressed properties do so by identifying homeowners who can no longer manage or sustain their properties, or by finding properties that are over leveraged and are at risk of going into default. On the other hand, those who prefer fixer uppers will remodel or enhance a property so that it works better for homeowners or is more efficient for apartment tenants. The buyer of a fixer upper, using this tactic relies on invested labor to increase values instead of just buying a property at a low cost to create high investment returns. Now, of course, it is possible to combine these two strategies when flipping properties, and trust me, a lot of people are doing that, right? However, consistently finding these opportunities, it can be challenging, right? For most people, flipping property should be considered more of a tactical strategy than a long term investment plan. Well, what are the pros and cons? Well, let's start with the pros and cons of flipping, right? A faster return on your money. One big advantage of flipping properties is realizing gains quickly, right? That's going to release capital for other purposes. The average time to flip a house is about 6 months. First timers, it might be a little bit longer, right? Another pro is going to be potentially safer investment. Unlike the stock market, which can turn in the middle of a day, real estate market's pretty predictable. In a sense, flipping properties could be considered a safer investment strategy because it's intended to keep capital at risk for a minimal amount of time. It also lacks the management and leasing risk inherent in holding real estate. Not to mention the hassles of finding tenants, collecting rent, maintaining a property, all that stuff you just don't want to do, right? Well, how about some cons? Well, costs, right? Flipping houses can create cost issues that you don't face with long term investments. The expenses involved in flipping can demand a lot of money, leading to cash flow problems, right? Because transaction costs are very high on both the buy and sell sides. They can significantly affect profits. If you're giving up your day job and relying on flipping for your income, you're also giving up a consistent paycheck. Another con is going to be the taxes, right? The quick turnaround of properties, right? Because speed is everything in successful flipping deals, right? It's going to create swings in income that can boost your tax bill. That's especially true if things move too fast to take advantage of long term capital gains tax rules, right? In those cases, you'll have to pay a higher capital gains tax rate based on your earned income if you own a property for less than a year. All right, well, then how about buy and hold? What are the pros and cons for buy and holds? All right, well, pro, ongoing income, because owning rental property provides you with regular income, no matter where you are or what you're doing. All right, what's more is buying and holding real estate is a known recipe for amassing great wealth. A lot of old money, right, in the United States and abroad was accumulated through land ownership. Despite periods of decreasing prices, land values have almost always rebounded in the long run because there's a limited supply of land. Another pro is going to be increasing property values. The longer you hold your investment property, the more likely you are to benefit from inflation. That will boost the property's value while the amount you borrowed for the mortgage goes down as you pay it off. Suppose you were able to purchase during a buyer's market and sell during a seller's market. Then there's also real potential for a significant return on your investment. Well, taxes. Owning a rental property has tax advantages not available to flippers. Rental property is taxed as investment income with lower tax rates. You can also write off expenses, including repairs, maintenance, or upkeep, paying a property manager, driving to or from your property. Furthermore, you'll pay taxes at the long term capital gains rate should you decide to sell after owning the property for more than a year. Cons: vacancy costs. Being unable to find tenants is one of the risks of owning rental property. That's true whether you do it yourself or you hire a property management company to do it for you. If your property sits empty for months or years, you still got to cover that mortgage, right? Before investing in a buy and hold property, you want to make sure your budget will cover about 1 to 3 months of vacancy each year, right? Another con is going to be management and legal fees. Long term real estate ownership is a management intensive endeavor that is outside the skill set of a lot of investors. Some investors, especially first time rental property owners, are ill prepared and ill equipped to deal with the responsibilities and legal issues that come with being a landlord. The process of finding quality tenants and meeting their needs can be a stressful and time intensive undertaking. However, successful property management is necessary to ensure ongoing cash flows from all your investments. Well, then, now that we kind of got all this good information, let's choose a strategy, right? But first, you need to answer a few critical questions to decide, which one's going to be the best strategy. You got to decide whether your capital allocation to real estate is a permanent investment or just a way to profit from an unexpected rise in home prices. It would also help if you determine what risk and return ratio is appropriate for this portion of your investment portfolio. Finally, You must have the risk tolerance and skills to take on the management responsibilities that go along with either type of investment. Suppose the capital is not available to purchase a diversified portfolio. In that case, a prospective investor must be prepared to take on unsystematic risk. That includes individual property risk and potential lack of demand for the property, whether by homeowners or renters. If you're considering a buy and sell strategy, you must also determine whether you have the skill to uncover distressed sale properties or fixer uppers. In this transactional strategy, it's essential to figure out whether capital can be turned enough times within a given investment period to overcome the transaction costs, right? The brokerage, financing, closing fees, all that stuff, right? You can enjoy both strategies, right? The benefits from each one, right? By developing a good business flipping houses and using your profits to invest in long-term rental income properties. All right. Well, then let's get down to the brass tacks, right? What's the bottom line here? Well, the choice between the two strategies, right, it's really going to depend on your particular situation, right, and your goals. Nonetheless, the long-term holding strategy is generally more appropriate for those who use real estate as a core portion of their overall investment portfolios. On the other hand, flipping properties is usually better when real estate is used as an adjunct or a return enhancement tactic. Investors wishing, to amass wealth and derive income from their real estate investments should consider holding real estate for the long term. They can use the equity built into the portfolio to finance other investment opportunities with the potential of eventually selling the properties in an up market. Flipping properties is a tactic that is best suited for periods when prospects in the stock and bond markets are low. It can also work for people trying to realize short-term capital gains for as long as the housing market will allow. So now that you got a good information about buying and holding or flipping houses, I would say, pick which one you want to get into and start with that one, but don't write either one off, right? I feel like you should definitely try both. Personally, I'm trying buy and hold first, and then I'll get into flipping later on, hopefully with someone who is, we'll say, a veteran in it, right? Can show me the ropes, because I don't want to just dive head first into it. I really hope you guys enjoyed this video, though. If you did, I'd really appreciate you hitting that like button. If you're not subscribed to the channel, go ahead and hit the subscribe button as well. Until I see you in the next video, y'all be safe.